Yeah. So, the subjectivity comes in, where do you anchor from? And that's why, I spent a chapter on here are the places to anchor, and then strategies going into, how to use those anchor points as far as potential support and resistance. I call them levels of interest. Just, this week we've come down in the NASDAQ 100 to the anchored volume weighted average price from the beginning of the year. And for 3 days, it looked like we were going to hold that, and now we've broken below it. So, I look at it and I say, here's the truth. From the beginning of the year, the average participant, the collective psychology of the market, the anchor point for, when we buy a stock, we're anchored to it. We say, I bought a stock at 108. That's my anchor. I measure my success or failure based on that. I might be the only person in the world that cares about 108. Some people will say the most important price is the closing price. No, it's not. It's how the price closed in relation to where I own it. The market is a selfish endeavor. It's all about me, me, me. Am I doing well in this trade, or am I doing, do I feel stupid and what's going on here, searching the news, and how do I fight that? You say, well, I want to look at an objective level, such as the beginning of the year, because that's important in terms of how money managers get paid. And when we look at that and say, here's a potential level of support, it's a level of interest, then I say, well, I don't want to just blindly buy there. And I've got a chapter about, some people will just buy the touch of the VWAP. And I've seen it work just countless times where it is the exact high or low. What I prefer is not to buy the test, but instead to wait for evidence. I look at the shorter term timeframes and I say, okay, who's in control from the low that it made 3 days ago? We're back below that volume weighted average price. The buyers haven't gained control from that point yet. So it's still looking suspicious to me. I don't want to commit yet. I don't want to do the dirty work. I don't want to take risk. My job is to minimize risk and look at the market and say, let all those institutions with their hundreds of millions of dollars battle it out and figure out who's going to take control. And once it's evident to me that the evidence says the buyers are back in control, well, then I'm going to buy it, but I'm going to buy it, as I do with everything, in an extreme measure of confidence. We all have that fear when we buy it, like, oh, what if I'm wrong? I don't know if I'm right. People say, well, Brian, what do you think this is the place to buy? I don't know. The market will tell us later. I think it's a good place to start looking, and if we see evidence on a shorter term time frame, I'm going to get involved under these conditions. And the main condition is, do I have a low risk place where I can set my stop? Do I have a recent low that I can protect my stop, my position against? So if it breaks that recent low, then I'm going to get out of it, because I thought the market was going higher. Instead, it breaks a lower low. Well, as a trend trader, there's no reason for me to continue to be involved. So I'm just going to cut the cord. And that's an unemotional rule of engagement or disengagement. Really, is I'm just going to get out under these conditions, because I've been doing technical analysis for 32 years. And I believe that it's true. A trend once established is more likely to continue than reverse. But if it does reverse, why on earth would I continue to hold it? I've done that in the past. I've learned the hard way. That's how you lose money.